Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having been under some selling pressure, the Australian dollar managed to snap out of its two-day bearish bias and found renewed demand. However, we can see from the close we've got an inverted hammer, which is giving a somewhat mixed reaction in terms of how strong the bulls actually were in taking the market up towards near that 66-cent handle. Combining the demand close to around that 65, 20, 45 support, which is where we are now, yesterday the business activity in China's services sector grew faster in November, with the Asian services PMI accelerated to 51.5 from 50.4 in October. Meanwhile, more reports came out on Wednesday that suggested the US Federal Reserve may hold steady on its interest rates at its next meeting next week. The ADP National Employment Report is cooling off much more than expected after the number came in by an increase of 103,000 jobs in November, while on Friday the more comprehensive non-farm payrolls report for November will offer greater clarity on the state of the labour market in the US. The forecasts at the moment hold around 185,000 jobs added, with the previous of 150,000 jobs added, with the unemployment rate seen at 3.9%. The dollar index, meanwhile, edged up slightly to 104.10. But I still feel if the Federal Reserve keeps to a dovish bias, then much talk of a rate cut next year by March could actually get the dollar somewhat weaker. So as I mentioned, the support is seen around 65, 20, 45, which is close to where we are now. I do anticipate a bounce and look eventually back towards 66 to 67 cents. The euro falls further and now posting its sixth consecutive day. As I mentioned, the dollar index has risen to 104.10. The economic data, as I mentioned, I still feel the dollar will struggle above 104, and therefore when we get closer towards this trend line seen around 107, 2025, I do also anticipate demand to return and expect a bounce and look up towards the region of 108, 40, 45 to 109, 10, 15, with the cap holding at 110. Dollar yen, the market is still somewhat lackluster as it crawls higher and still potentially looks for a downward test that is towards the region of 146 to the objective of 144.5 to 80. Any advancement beyond 147.55, 65 should encounter a bearish response. Moving on to the pound, well, all eyes were on the Bank of England Governor Andrew Bailey, who said that rates will stay higher for an extended period at a press conference after publishing its latest financial stability report on Wednesday. He also said the full effect of high interest rates is yet to come through, and therefore we remain vigilant to the financial stability risks that might arise. He also added that the inflation outlook was uncertain. Looking to the technicals, well, I still feel the market will find a bullish response close to the bottom side of this range around 125.25, and therefore see a bounce and look back up towards 126 to around 127.5. No significant moves were seen in gold overnight, even though we did see a blow off top this week and a bearish outside range day, which waits confirmation. If we see a break of 2007, that would ignite the move down to 1,968 to 69. I still feel the market is a little bit long and maybe caught, and therefore a break of 2007 would trigger stop losses. Looking ahead, we've got the weekly jobless claims out Thursday. Let's see what happens from there. Moving on to oil, the market crushes the supports and all the way down to $70 a barrel, and now exposes the next level, which is around 67, 10.25. We are oversold, and I do anticipate eventually a bounce, but it looks like the market still wants to try and take out stops as the long market started back in June being squeezed out. So let's see if the base does hold around 67, 10.25 and look back towards $72 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoyed a great start to the day.